I decided to sell my position in Trade Desk. It's a relatively small position in my portfolio. I never got the chance to build it up into something. I valued the company on May 11th, 2021, and got a fair value of $525 per share. I included a link to my valuation in the description below. I bought two shares at $484. That's about a 10% upside. Nothing has changed with the company's underlying business. I just think the company is overvalued at the current trading price of $601.56 per share. This is my updated assumptions for my DCF model. Most of the inputs stayed the same. My calculated cost of capital is different because I'm using a more current 10-year treasury yield for my risk-free rate and implied equity risk premium as of June 1st. I got the implied equity risk premium figure from Professor Damodaran's website. I included a link to it in the description. I decided to change my sales to capital ratio for this company. I originally assumed 3-to-1 in my May valuation. So for every $1 the company invests, it will earn 3 in sales. Looking back, the assumption was too ambitious, considering the company was never that efficient in the past. So for my current valuation, I assumed that the company maintains its current investment efficiency, 0.91. This will give me a fair value of $451 per share. At the current trading price of $601 per share, the company is about 33% overvalued. I made a 24% gain from this investment. Again, it was not a huge position, so I did not make a lot of profit. This just increases my cash balance in my trade account to about 15% of the total. Two companies that I want to look at are Lemonade and Chewy. I recently purchased pet insurance on the Lemonade app. It was really quick and easy. I definitely enjoyed the experience, and I could see the company becoming a really big player in the insurance industry in the coming years, especially with their platform catering towards the younger generation. So definitely look out for my evaluation for the company.